Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. China's industrial output expands faster than expected in April, highlighting the resilience of the world's second largest economy and feeding optimism about growth. Meanwhile, the world's largest economy was stripped by Moody's of its investment grade rating, though symbolic. The downgrade is expected to revive the Sell America theme triggered by Trump's trade war. BNP Paribas APAC Deputy Head of Global Markets will be joining us to discuss whether he sees opportunities in both those markets, or will investors have to choose just one? The China-US trade truce prompts other countries to take a tougher stance with Trump. We'll look at what India is planning as the two countries try to hammer out a trade deal. This is Insight, the two major themes playing out on the markets today. Moody's stripping the U.S. of its investment-grade credit rating, raising fears that it will revive the Sell America play. Meanwhile, Chinese industrial output still managing to expand faster than expected in April despite the tariffs. Let's do a check-in on how markets are digesting these with Huang. And Avril, it is a pulse check on the Chinese economy.
Absolutely. It gives us a picture, a snapshot of the Chinese economy, right? The data that's just out in the past hour on the extent in which these tariff shocks, the external challenges, domestic challenges weighing on the economy, although it doesn't tell us anything about the trade truce between the US and China, it also sort of paints a picture of this relative resilience in the Chinese economy. I'll get into the data a bit more in just a bit, but take a look at how the Chinese benchmarks, both mainland as well as Hong Kong, managing to pare some losses. Worth noting that when it comes to a sentiment hit for the market, we did see media reporting about how US officials seemed concerned about Alibaba and Apple on a deal between the two, but overall, the Chinese stock declines not as bad, I think, today. Dollar China continuing a bit of a climb upwards. This is despite the losses we're seeing on the greenback. Now, on the data, flip the board, take a look at how we are, digesting all of this. It was slowing on the retail sales, industrial production, investments as well, whether you're talking fixed asset or property. But what stood out was when it comes to the factory output, it was better than consensus. So adding to the signs of, maybe things are not as bad as expected, although this is also worth noting a function of the exports, right? That pillar of growth for the Chinese economy. And if you look a bit under the hood, you'll also see that when it comes to mobile phones output, there was a sharp decline, slowing as well when it comes to integrated circuits. So a bit of mixed data, but not as bad potentially.
Well, we know that investors are also mulling Moody's downgrade. Of course, Moody's playing catch up. Still, it is an area of concern.
Yeah, the US has just lost, right, its last AAA rating, following on from Fitch and S&P. Now Moody's kind of joining the club in downgrading the US. And what it really flagged was the ballooning budget deficit out of the US. So potentially something that could spur again this mini Sell America theme. What's really interesting is that, yes, we are seeing those further declines in today's session on the US 30-year extension yields on the long end continuing to climb. But when it comes to the stability sort of returning to the 2s and the 10s, that's really interesting to see. Now, aside from that, dollar, I think most would agree that it's still one of a path lower. Flip the board. On stocks in the US, I think the trajectory is a bit more nuanced because we have been seeing the momentum returning to US stocks recently. You look at earnings, the results have been pretty decent, even though the guidance has been quite lacking in conviction. For now, you are seeing US futures pointing to a reversal of last week's gains, particularly when it comes to tech. And
when it comes to the dollar, we heard from Christine Lagarde saying that, that drop versus the euro is counterintuitive. Avril Huang, thank you so much for that. Let's get more market perspective. Brian McCappin, APAC Deputy Head of Global Markets at BNP Paribas. He joins us exclusively from the sidelines of BNP Paribas Global EV and Mobility Conference in Hong Kong. Brian, good to have you with us. First off, let's start with the data out of China. Pretty mixed picture. How are you assessing what we're seeing today?
Morning, Haslinda. Thanks for joining us. Look, the sentiment here is relatively robust, actually. The clients that we talk to are used to dealing with a great deal of uncertainty at present, particularly in recent months. And we're not seeing anything today, and I know we're going to talk about the Moody's headline, that's really shaking that. Clients are, in fact, quite pragmatic, and in many cases are looking through the short-term data that we're seeing today that you reference.
You know, in terms of what your clients are doing, what are they doing when it comes to the Chinese market?
Clients are pretty positive on China, Haslinda, at the moment, for a number of reasons, right? We've seen a short-term history, starting with the DeepSeek moment. We've seen a reduction in some of the trade tariff tension. We've seen a fantastic deal come to market here last week, and in fact, in front of us, perhaps some policy easing to come. China valuations look relatively cheap. China's recognized as a source of incredible innovation. In the tech sector particularly, that's what we're doing here today at our EV conference. The growth looks pragmatic and surprisingly robust. And more importantly, China equity has decorrelated from global comparables. And so if you're a global asset manager, you're an index, you're weighted against global performance, to be honest, you know, you need to take very seriously the China market, obviously.
Brian, as we speak about technology and chips and AI, we have Jensen Huang speaking on the sidelines of Computex in Taipei. Of course, this is the biggest tech event in Asia. We're seeing him on stage right now in his traditional leather garb. You know, just to put this question to you, in terms of the chip plays in China, how compelling are they?
I'm sorry to be joining you in a suit, Haslinda. I don't look quite as hip, but look, again, you know, we've our own conference here today. You know, we've over 50 corporates joining us. We've over 500 clients joining us. The investment interest in China tech, at least today we're representing EV and mobility, the interest is extremely high. We've got clients going on field trips, they're having one-on-ones, there are industry experts with us, and I can only imagine that the reception in Taiwan is very, very positive, just like the reception here in Hong Kong with us and our clients.
You got to wonder how you're looking at your involvement in CATL's IPO in Hong Kong. I mean, now that CATL is included in the Pentagon's list, I'm just wondering how you're looking at that, the risk of it being on that list.
Well, CATL deal is a phenomenal backdrop to our event here in Hong Kong. It was great to see that deal come to market, and of course we played a role. You'll know that it's probably the largest listing, I think, year to date in the world. It's probably the largest listing that we've seen here in Hong Kong since 2021. The deal was priced at the top end of expectations and upsized to meet demand. And to be honest, despite all of the headwinds, the allocation challenges, perhaps those that you're referring to, the demand was incredibly robust. And frankly, that sets up Hong Kong very, very well for the large pipeline of issuers that are also thinking when to come to market. And the pipeline, as you're probably aware, is pretty robust looking forward. So again, from our standpoint, it's an extremely positive backdrop for the conversations we're having here today with our clients. It looks very, very positive for the Hong Kong market, and it's perhaps a strong validation of the investment proposition in China.
Robust pipeline, you say. Can you quantify that? And what are the opportunities for BNP Paribas in, gaining part or all of what's there?
Yeah, there's a lot of deals waiting and a lot of eyes on the transaction that you've just referred to. So I think you're going to see a lot of activity as we go forward, particularly if the risk environment remains mildly risk on. Clients are looking for, or borrowers or issuers are looking forward to taking part of the opportunity. To be honest, the opportunity for BNP Paribas is very interesting right now, right? Because my boss calls it the corridor moment. We sit here uniquely placed to bring global investors into Asia, but also to bring European products, European investment opportunities into Asia, and particularly into Greater China. And to go back to your comment on the Moody's downgrade, that couldn't be more pressing in clients' minds right now. Clients are looking to cross that corridor. They're looking to find diversification opportunities in their portfolios, whether that's in equity or debt. And they're looking to BNP Paribas, which is the #1 global markets bank for Europe, to help them with that. That's what we're doing here today, actually.
Let's talk about that Moody's downgrade. Some say it is just playing catch up because Fitch and S&P already downgraded, and when they did, the markets actually rose, unlike what we're seeing today. How are you assessing the risk from this downgrade, and what theme is it exactly playing into?
I think markets will look through the downgrade. As you heard over the weekend from a lot of US officials, it's largely priced by the market. Sure, we'll see some fluctuation in the dollar, perhaps on the yield curve in treasuries, but overall it's anticipated and expected part of the wider story. Again, what it means to me and to BNP Paribas is it gives us a chance to cross that corridor. Our clients want us to help them find alternatives to the dollar investments that they make so very frequently out here in Asia. Dollar investments in Asia aren't going away. This is a very dollarized region, as you know, but there is an incredible opportunity to divest into Europe and into European assets and to euro-denominated assets. And for us, this narrative just further exacerbates that interest from our clients. I am sure we're going to hear those phones calling our salespeople, asking for further advice and commentary in that regard from here.
How about divesting into Japan? You say the market's been pretty busy.
Japan's been a good story in the region. Obviously, it's a large weight to any activity that takes place in Asia, but Japan's on a slightly different path. As you know, the Japanese interest rate cycle is normalizing, i.e. rising, and clients have been playing the yield curve as that process has been playing out. And we don't anticipate any significant changes in that regard. Japan will play a very material part of investors' activity in the region and globally, actually. But the real story that we see is the pivot to Europe, the interest in euro-denominated assets, the interest in European investors, issuers, and I think we're going to see a hell of a lot more of that going forward.
You know, we talked about the dollar environment. We heard from Christine Lagarde saying that the dollar's decline versus the euro is counterintuitive. I mean, how are you reading that statement?
I can see the logic for her statement, but again, dollar demand and the relative yield that you can achieve from holding dollar-based assets. Many of the banks and capital markets operations in our region are obviously built on dollar liabilities, so dollar demand isn't going to go away quickly. However, there is room for a substitution over time. There is room for a diversification over time, and that's the inquiry that we see most frequently. That's the corridor that we see our clients trying to cross. I was actually just in Greater China last week, and essentially every client that I meet with or that met with us as a firm is asking for us to help them more with that diversification trade going forward. And so nothing happens fast. The dollarization in the region isn't going away quickly. And sure, there'll be fluctuations, but the real story is the increase in activity and the focus on Europe. That mega moment, to be honest. Let's make Europe great again. Big focus for all clients out there.
Brian, you've been pretty upbeat about the Asian market, and to the theme of diversification, we're seeing flows into the region. What does that mean necessarily in terms of, the hiring that you're doing for this part of the world?
Yeah, thanks, Haslinda. Look, we're cautiously optimistic. I remember speaking to Stephen about this a year ago. We talked about our plans in two primary areas. First of all, we're hiring some salespeople. We want to make sure that we have enough qualified and effective salespeople on the ground to help clients when they call us about Euro assets, Japanese assets, whatever they're looking at, but particularly on the European side where we care about that corridor. But also, and relating specifically to what we're doing today, we continue to build out our equity platform, particularly in the research and advisory space, which is something that we're catching up some of the larger players on. But by the way, we're catching up very fast. So we're expanding gently in that space, and you can expect to see us continuing to hire steadily into both our sales presence in the region and also our research and advisory presence in the region going forward.
Brian, can you quickly put a number to it?
We're not an American institution, Haslinda, so you won't see us hiring hundreds, you won't see us firing hundreds. We'll be steady, but we'll be consistent, so expect to see more.
Brian, thank you so much for joining us. Brian McCappin, BNP Paribas. Meanwhile, latest data from the U.S. Treasury Department showed China reduced its holdings of U.S. Treasuries in March. The U.K. is now the second largest overseas owner of U.S. government debt. The reduction came a month before President Trump imposed reciprocal tariffs on several countries, including China. Beijing was the top holder of U.S. Treasuries as recently as 2019. Well, coming up, Asia's largest tech show is underway in Taiwan. Bloomberg's Annabelle Drulis is with us from Computex with a taste of what's to come.
Thanks, Haz. Yeah, we're here at the Taipei Music Center where Jensen Huang has just taken to the stage in the last 15 minutes. He's here to speak for the next 90 minutes or so, outlining what's his vision around AI. He's already spoken about how this company has been in Taiwan for the last 30 years, going from building out GPU chips all the way to its transformation to be at the center of AI. So we're going to have more on that ahead, more on the products that are set to be announced, and his vision for the future where AI is part of every single industry around us, Haz.
Well, the man in black, Nvidia CEO Jensen Huang, delivering the keynote address at Computex in Taipei, which is the biggest tech event in Asia, of course. It features leaders like Nvidia's Jensen Huang. The focus on AI chips, trade uncertainty, and the shifting geography of chip manufacturing. Let's get details. Bloomberg's Annabelle Drulis joins us live from Taipei. Belle, take us through what's the priority at this event.
Yeah, well, the big priority, at least for Nvidia, is going to be unveiling a range of new products, and we can expect that, as you said. We've just seen Jensen Huang taking to the stage here. So in the last 15 minutes, he's really been detailing the role that Taiwan plays for Nvidia. He's saying that Nvidia can't achieve what it's done so far without the help of the ecosystem that exists here in Taiwan. So over the next 90 minutes, as I said, he's going to be unveiling more products. He's already as well given a bit of a teaser of his vision of where AI goes next. And a big focus this year at the event is really on the application that we start to see in AI, more to humanoid robots. Again, that's a really big focus at this conference, but also into autonomous driving. Jensen Huang coming to the stage, of course. He's been here for the last few days. We've been traveling or following him around, but it does come under the cloud of rising US-China tensions, Taiwan's big question of the role that it plays in this and what exactly it can offer to the Trump administration as well to keep them on side.
Of course, you said you've been following him around. You spoke to Huang ahead of the event. What did he have to say?
Yeah, well, I think it's important as well to note he has been here for the past few days, but prior to his visit to Taipei, he was also in the Middle East, and he joined the Trump delegation there where they were unveiling these multi-billion-dollar commitments to send not only semiconductors to Saudi Arabia, but also AI accelerators to the UAE. Now, the big question, of course, it's good for companies like Nvidia. They want to see more supply going outside the US. There's still that question mark, though, when you have so much high tech leaving US's borders. Are there those questions of whether you could see any sort of diversion into China? So I asked him that question, whether there's enough protections in place. Take a listen.
Governments understand that diversion is not allowed, and there's no evidence of any AI chip diversion. Now, recognize our data center GPUs are massive. These are massive systems. The Grace Blackwell system is nearly 2 tons, and so you're not going to be you're not going to be putting that in your pocket or your backpack anytime soon. And so these systems are fairly easy to keep track of. But the important thing is that the countries and the companies that we sell to recognize that diversion is not allowed. And everybody would like to continue to buy Nvidia technology. And so they're very well, they monitor themselves very carefully, and they're quite careful about that.
So really downplaying any sort of risk around diversion, but from what we hear from sources within the Trump administration, there's certainly a lot of questions and concerns that there could be national security risks, and that there needs to be firmer language within the accords that prevents any technology from the US ending up in the hands of China.
Belle, another big question is also what next for China after the H2O chip was banned there. I mean, what did Huang have to say about that?
Yeah, the H20 chip, so this was banned for export to China just several weeks back. This is the chip that Nvidia specifically designed for the mainland market. So it is a big blow to Nvidia as a company. They've already flagged, for instance, a $5.5 billion write-down for this current quarter due to inventory and logistics that were tied to that specific chip. I asked him what's going to be the next one. He's saying that definitely it can't come from the Hopper series. There can be no further modifications beyond what they've already done for the Chinese market. The question as well is if you continue to essentially dial back the amount of advanced technology in the products, does that also decrease the competitiveness of Nvidia within the Chinese market vis-a-vis Huawei in particular? And I asked him, would he be losing further ground to that business? He said, yes, it is a risk, most certainly. It's a challenge, and they're just going to be doing the best that they can.
Great reporting there, Belle. Bloomberg's Annabelle Jewell is live at Computex in Taipei. Now, Nvidia CEO Jensen Huang, as we said, delivering the keynote address at Computex in Taipei. Let's listen in.
Structured data can be accelerated as well. cuML, classical machine learning. Warp, a Pythonic framework for describing CUDA kernels, incredibly successful. cuOpt, mathematical operations, optimizations, things like traveling salesperson, the ability to optimize highly constrained, large number of variables, type of problems like supply chain optimization. This is an incredible success. I'm very excited about cuOpt, cuDSS and cuSparse for sparse structure simulators. Those are used for CAE and CAD, fluid dynamics, finite element analysis, incredibly important for EDAs and CAE industry. And then, of course, cuLitho, one of the most important libraries for computational lithography. Mask making could easily take a month. And that mask making process is extremely computationally intensive. And now with cuLitho, we could accelerate that computation by 50 times, 70 times. As a result, this is going to set...
Welcome back. You're watching Insight. A source tells Bloomberg that Vladimir Putin believes he has a strong hand ahead of a phone call Monday with President Trump. This comes as Washington is pressing for a quick end to Russia's war in Ukraine. For more, let's bring in Bloomberg government editor John Huskovich. John, put this in perspective for us. Just how much sway does Trump have? What are the expectations for diplomacy for Russia's war on Ukraine?
I think the expectations in this way are kind of different things. The expectations are not all that great that Trump is going to ask for Putin to make any concessions. Putin has, as we reported, thinks that he's in a relatively strong position and won't be asking for any concessions. In February, Trump and Putin had talks, and the talks raised worries about Trump acceding to what Russia demanded and not asking anything from Putin in return. In effect, shutting Ukraine out of the process, making a deal, a fait accompli, without any input from Ukraine or from Europe. In terms of what the sway that Trump could have, there's immense pressure that the U.S. can build on Russia in terms of sanctions, perhaps taking a look at some of the assets that have been seized from Russia as funds that could be used for help in Ukraine's rebuilding after the war. Whether he uses these or not is another thing. But it seems like if you look at what happened in February and what's coming today in terms of the talks, we may see Trump very much aligning himself with Putin in terms of what he wants from the deal. And Trump mentioned this last week in an interview with Fox News. He said the best way to get a deal is a face-to-face talks with Putin, and also brought back that point he made earlier in the year that he doesn't see Ukraine as holding many cards in this matter.
You talk about talks last week. Were there any breakthroughs?
Yeah, we had, actually, it was about a week ago that there were expectations that Zelensky and Putin would meet in Turkey for talks. Of course, Putin didn't go. There were talks. They were low-level talks. The breakthrough was an agreement for a prisoner exchange. But any progression towards a peace deal, there's nothing of that sort. In fact, over the weekend, Russia launched one of its biggest drone strikes on Ukraine, just a sign that Putin is really ready to intensify the pressure. Zelensky, on the other hand, had meetings in Rome during a mass with the Pope. He spoke with J.D. Vance, he spoke with Marco Rubio, and tried to get more on the same page as those U.S. officials. But we have one thing, Putin showing a more aggressive approach going to the talks with Trump's, and Zelensky not really able to get his, he's been pressing for a ceasefire, he wanted to talk directly with Putin. None of these things have come to fruition.
You got to wonder whether there can really be, a resolution given that Russia maintains it wants control over 5 regions in Ukraine.
Exactly. I mean, Putin has been making maximalist demands that are just unacceptable for Ukraine. So the idea that there could be some sort of deal along the lines that Putin wants seems rather difficult. It's really difficult for Zelensky to accept these. The ceasefire is seen as an intermediate step, whether it's a week, 30 days, something that could move the process along towards some sort of resolution. And Putin hasn't really agreed to a ceasefire in any meaningful way since the talks have begun with the Trump administration.
John, thank you so much for that. Bloomberg government editor John Huskowitz there. Meanwhile, an Indian Defense Ministry-led research group alleges that China provided air defense and satellite support to Pakistan during its recent clash with India. It suggests Beijing was more directly involved in the conflict than previously disclosed. For more on what this means for ties, just as India and China were beginning to mend relations after several years, we're joined by government reporter Sudhi Ranjan Sen. Sudhi, how exactly did China help Pakistan during that conflict?
Well, from what we are getting to hear from the government right now is that China helped Pakistan reorganize its air defense, and at a very critical time. And this is just after 26 tourists in Kashmir are killed. And there is a clear statement that is coming, or an statement of intent coming from Prime Minister and the government of India, that there is going to be retaliation. So it clearly shows a direct involvement of China, which we did not know. In addition, what we have reported is that China adjusted its satellite passes over India to kind of pick up the deployments, the movements of the military on the Indian side, and the assessment is that these were passed on to Pakistan. So it's a much more direct involvement than just the use of weapons that was known to everybody, and this is kind of coming out for the first time from India.
And this wouldn't sit well with India. What does it mean for India-China ties when, they're just beginning to warm up?
Well, this would be a huge hurdle. This would be one of the major factors, that now India will have to consider. In fact, what we are also getting to learn that now India kind of plans in its, when it's planning for possible conflicts, hostilities in the neighborhood, it plans for a joint front between of China and Pakistan, which is a kind of a complete game changer if you look at it, because then therefore the frontier that India will have to look at when it's planning its military capabilities and strategies is as long as 700 something around 7,000 kilometers long, which is a huge frontier. There is no difference therefore between the western borders with Pakistan and the northern and eastern borders with China. So that is a huge change that the military is looking at.
Sudhi, is there a sense of how Chinese weapons, in particular Chinese air defense, performed in that conflict?
The assessment that that has been shared with us very clearly says that the Chinese air defense equipments performed below par, and in some cases they just could not do the job that they were supposed to be. Although we have seen Pakistan talking up Chinese weapons, we have not heard anything so far from Beijing. But India's assessment is that these weapons are below par, and China has been using Pakistan to kind of battle test their weapons. Mind you, these systems have never ever been tested before.
Sudhi, thank you so much for that. Government reporter Sudhi Ranjan Sen. And staying on India, President Trump downplaying any urgency for a deal with India. And he says New Delhi is offering to cut all tariffs on U.S. goods. More on the trade negotiations next. Keep it here with us. This is Bloomberg. Live pictures out of Taiwan, where Nvidia CEO Jensen Huang is delivering the keynote address at Computex in Taipei. One headline to tell you about: Nvidia's next-gen GB300 AI systems, he says, will be coming in the Q3 of 2025. Of course, this is the largest tech show in Asia. The focus is on AI chips, trade uncertainty, of course, the shifting geography of chip manufacturing, all in play. Nvidia's next-gen GB300 AI systems coming in the Q3 of 2025, according to Jensen Huang. Well, we're counting down to the market open in India. Let's take a look at how it's all shaping up. Indian stocks, by the way, near a 7-month high. Bond yields at the lowest levels in 3 years. The focus has been on how India can benefit from Trump's trade war, favorable macroeconomic forces, a dovish central bank seen supporting that bullish sentiment. Sensex currently flat at a time when Asian markets are in negative territory. Now, speaking of Trump, President Trump saying India has offered to cut all its tariffs on U.S. goods, but he's downplaying any sense of urgency to reach a trade agreement with New Delhi. Bloomberg's Shruti Srivastava joins us now. Shruti, what are the talks progressing? How are they progressing between India and the U.S.? And what about Trump's claim on India offering to drop all tariffs on U.S. goods?
Thank you, Haslinda. So the talks between India and the US have been progressing really well. They have been on track. Indian Trade Minister Piyush Goyal and the chief negotiator who is negotiating India-US trade deal, their team is in the Washington right now to discuss with their counterparts to advance the negotiations forward. The team and the minister are likely to discuss market access. They are likely to discuss rules of origin and non-tariff measures. Piyush Goyal, India's trade minister, he is also likely to meet USTR Jameson Greer and US Commerce Secretary Howard Lutnick during his stay. So the things have been really on track. However, one more thing I would like to add, the two sides are also trying to prioritize a couple of sectors so that they can secure a sort of an interim agreement within this 90-day pause to Trump's Liberation Day tariffs. However, I would say the things have been a bit uneasy and tumultuous over the last few days, and I would say three things have led to that. First is, Trump's repeated claims that he used trade as a bargaining tool to secure a ceasefire between India and Pakistan. That has left officials in India fuming. Indian officials have refuted the claims. The second thing is that India, for the first time during Trump's second administration, it threatened to impose retaliatory tariffs on, U.S. higher duties on steel and aluminum. Now, this was the first tough stance which was adopted by India during the second Trump administration, which is very significant because so far India has, moved to placate most of, Trump's demand. It has made sweeping changes to its tariff regime to, fulfill some of Trump's key priorities. So this was the first retaliation. Thirdly, Trump has, twice said that India had offered to drop all the tariffs on U.S. goods. And these comments were refuted by India's External Affairs Minister, S. Jaishankar, who said that it's too premature to come to any judgment because the negotiations are still on and the talks are still going, and the deal would be done only when there is a mutually beneficial agreement between the two nations. So these three things have defined how the things have moved in the past. We are still unclear how the talks are shaping up while the minister is in Washington. So we will see what comes out of the meeting of Goyal with his counterparts.
Shruti, we saw how China adopted a pretty defiant stance while negotiating with the U.S. Any takeaway for India? Is it shaping India's position in any way?
I would say it's very unclear why India decided to retaliate last week as it did at the WTO. So India said that the measures which U.S. has taken on steel and aluminum, raising tariffs to 25%, that's a safeguard measure, and India has reserved its right to suspend the concessions it gives to the U.S. So that was the first retaliation. And hours before that, China and U.S. had reached a sort of truce, and there was a major de-escalation in trade tensions between the two nations. The higher tariffs they had imposed on each other's remained suspended for 90 days. So I think one can read that, maybe it's a sort of vindication for Xi Jinping that a tougher stance with the US, with the Trump administration, works in the longer term. So officials in New Delhi have not clearly said that their decision is guided by that, but it would seem that countries are realizing that adopting a tougher stance might actually pay off in the long run. One more thing I would like to add, Haslinda. So Trump's claim that, India had offered to drop tariffs on all U.S. goods. While that is clearly, officials have clearly said that is not correct. But in one of the proposals, India did say that, it would offer zero tariffs on a reciprocal basis to U.S. goods. So if U.S. reduces tariffs on Indian goods, India would do the same on some goods. That is the only position we have. That is the only clarity we have so far. We don't have clarity on what other offers U.S. is making.
Bloomberg Shruti Srivastava, thank you so much for that. Well, my next guest believes India may benefit from trade diversion flows in the midst of tariff pivots. Let's bring in Radhika Rao, senior economist at TPS Bank. Good to have you with us. Even as you express optimism about India benefiting, it's still unclear where talks are headed. How concerned are you that, it's he says, she says?
No, certainly, I think any tariff-related negotiation, is in reciprocal basis. So India has laid out certain terms, and so has the US. India was in the initial list of countries with which US was ready to sign a trade deal. I mean, apart from Japan, South Korea, and you've already seen UK being signed. So I think things are on track. Of course, the fine print is always where there could be a bit back and forth, and I think that's what is happening at present. But meanwhile, I think there are a couple of timelines that the markets are looking at. The first one is, of course, if this 90-day window for all the countries, which comes up on 8th or 9th of July, does it stay in place? Does it become another 90 days? Or are there specific terms? Some countries, taxes go up, some tariffs go up, some doesn't. So we'll see how that pans out. But till then, I think this would be a very crucial period. And so in this midst, I mean, what do manufacturers do? I think there are some manufacturers who have, on anecdotal basis, mentioned about if they have presence in India and some other country, they try and increase the production lines in India, for instance. Some American companies, some Northeast Asian companies, some European companies. So I think that is heartening to see, because that does show that whichever way the tariff goes, there is interest in diversifying. I don't think you're going to see many people uproot their production lines, but certainly reassess and rejig where production happens more and which country looks like a good domestic market as well as an export market.
The thing is, there is a huge risk. We heard from Trump saying that perhaps he's going to use trade as a way to get to a resolution in the India-Pakistan conflict. I mean, that casts a shadow over a possible trade deal.
Yes, I think we've seen two themes kind of merge and the lines becoming a bit blurred. I think India's stance, again, I take cues from what the official statements have been, that a ceasefire has been put in place for the border areas, and it's going to be a two-way thing. Any aggression from one side will be retaliated with the other. But US, of course, is a third party, and what they have to say on this, I think will be taken at its face value. But in the background, I would think India's trade talk does move parallelly to what's happening on the geopolitical side.
You talked about how India will benefit from the trade diversion. Can you quantify that, and how exactly might that play out in terms of supply chains?
So at this stage, it's quite anecdotal. We have actually seen in the past couple of years FDI on the gross basis do quite well. So you've seen ballpark of about 72 billion of gross FDI. Of course, when you see the net FDI, the number shrinks considerably, and that's because there have been some foreign outflows, some repatriation flows as well, which has impacted the net figure. But I would think in the next 3 to 5 years, a number closer to 75-80 billion is not out of bounds, right? You might see those. At this point, it's many companies that we hear from, that we've been speaking to personally, or that we hear from domestic sources saying that they've expressed interest. So those flows do need to come in, and all of them don't. I mean, if it's a few billions, it's usually brought down in a few millions per year. But we do think there could be, a more material change in numbers as we speak.
So pretty upbeat. We know that Q4 numbers are coming out in terms of growth estimates. How are you looking at that?
So growth numbers are going to be interesting to watch. So this is the fourth quarter, the final quarter of the fiscal year 25 in India's case, which is the Jan-March quarter. I think we're going to see a bit of a divergence. We do think that the real GDP, India has two measures of growth. So the real GDP will look a bit elevated, and the gross, which is supply side measure, will look a bit benign, and that gap is a bit more technical, because of production taxes. Nonetheless, I think the story pretty much that growth is kind of stabilized, at least by our own calculations, around 6.2% at the benign case. And I think going into fiscal 26, forward looking, we expect that to hold as well. Bit of change in hands in terms of what is driving growth. We still think trade could be a net boost, but between consumption and investment, we think consumption will fare a bit better than investment, especially on the private sector side. The kind of uncertainty that we have seen from what's happening globally, and worried about what's going to be the impact locally, private sector might be a bit slow to catch up. But given all of this, we think growth in the fiscal year that we are in, which is fiscal 25, it's going to stabilize at about 6.1%.
When it comes to fundamentals of the economy, we see that inflation is pretty muted. Opens the path for the RBI to cut rates from here. How are you assessing the fundamentals of the economy?
So the central bank is a very different central bank from 2024. That time, the tongue was quite hawkish, their growth numbers were quite strong, and inflation was a bit more stubborn in terms of trend that it was following. Fast forward to 2025, we have actually seen inflation come down quite significantly. Right now, it's trending below the midpoint of the target range. We've seen liquidity in abundance, domestic liquidity that is, and growth projections that the RBI has are kind of coming closer to where the street is. So kind of telling you that, yes, they don't see a 7% plus growth, but a more closer to 6% plus growth. So these things certainly, to your point, prep the ground for rate cuts. In fact, they've already delivered 2. We think at least 2 more are in the pipeline, and we'd see next one happening as soon as June. So it's going to be quite a multi-pronged. It's just not rate cuts. It's providing liquidity, making sure that any kind of stress that they see in particular sectors are addressed to. In fact, as a case in point, risk weights for some sectors were also lowered. So yeah, they're looking at it from a holistic view, but as far as rate cuts are concerned, we do see at least a 50 basis point.
And as far as the economy is concerned, growth is concerned, manufacturing is key. We had Trump saying, you know what, Apple, we don't want you to be move production, from the U.S. to India. I mean, that would have implications on growth itself. How are you assessing that kind of situation?
Yeah, Apple's move through its suppliers especially has given a very big boost to the electronics part of the supply chain for sure. I mean, we will leave it to Apple to decide what they want to do about the comments that have come out. But insofar as India's ecosystem goes, of course, besides Apple, there's been Google who had mentioned moving some Pixel production bases as well. Then you've got Samsung, then you've got some of the Japanese companies, and working with domestic electronic firms, Lenovo, HP, trying to produce IT hardware on ground. So a lot more players in the mix. So I think they won't be drawn just by comments. I would think that they would have seen some strengths, perhaps. That's what is making them divert flows. So we would watch this space very closely. But I think electronics and perhaps IT hardware and then semiconductors after a few years could become the niche areas. I mean, solar, renewable energy, all these are sectors that are quite active. There are certainly risks on the horizon in terms of how globally things pan out. So that would decide the speed at which this revival happens.
Of course, expectations of a weaker dollar from here, what does it mean for the rupee?
So in our own forecast, we have a slightly firmer currency. In fact, in the past 15 days or so, there's been quite a swing, based on what's happening on the US-China trade, and then you've seen dollar also come back a bit. Our FX forecasts are that rupee will gain a little bit compared to where we ended 24 and where we're going to end 25. So we do see it appreciating by a very modest bit.
Radhika, thank you so much for that. Radhika Rao, DBS Bank. We take you again to where it's all happening, and that is Taiwan, where Nvidia CEO Jensen Huang is delivering that keynote address at Computex in Taipei. Another headline to inform you of: Nvidia, TSMC, Foxconn will be building Taiwan's AI supercomputers. Of course, we told you about that Nvidia's next-gen GB300 AI systems will be coming in Q3 2025. Again, Nvidia, TSMC, and Foxconn will be building Taiwan's AI supercomputer. Well, that's it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg, and we leave you with Jensen Huang in Taipei.